Aloha, and welcome to the Sylvan Bell Business Growth and Exit Strategy Podcast, your guide to building companies that command maximum multiples. I'm Sylvan Bell, author of 5 books on business strategy and sales, creator of the Sell Framework, Scale Framework, and Driver Test. I work with owners of $10 million to $250 million companies, whether you're scaling for growth or positioning for a profitable exit. Each episode breaks down one framework, strategy, or concept you can apply this week to grow revenue systematically, scale operations, and maximize enterprise value. Let's get started. Welcome to episode number 27, Leadership Depth and the Multiple Expansion Engine. Today is all about your leadership team. We're going to use some mental models and in some inversion thinking to help you get to the next level when it comes to you getting your maximum multiple for your exit. One of the things that you really want to think about is depth drives deals. Buyers are not acquiring potential. You will get dinged and dented when they say, hey, we're going to acquire the potential. We're thinking this is maybe. You're not getting the maximum multiple for that. They want to acquire teams that execute without you, the founder. So for you, you got to build a great team. But sometimes there's the hesitancy. And I'm going to give you the real conversations that owners have, founders have, entrepreneurs have is one, I don't want them to know all the details about my company. Oh, okay. That's fine. 2, if I train them, they're going to leave. 3, I'm going to lose some of my control. And you know what? All those things are probably true. and it's an uncomfortable truth. But, you take a look at some of these big, giant corporations and somebody's running them. And then they've got a manager on the team and they're running that department. What you're going to find is you as the owner, you as the founder, you as the entrepreneur, at some point, have to make the decision of like, I need to escalate up and get to the next level. I need to be above the business, as is said in the world of business. Got to be above the business, and that's really what you pay operators and managers for. And if you doubt this, that's how private equity, private investors, buyers groups run businesses. They will literally buy something out of state and have somebody else run it. And so if you're like, hey, Scott, can a business run without me in the same way? Probably. Is there going to be challenges? Yeah. Is there going to be wins? Yeah, you're going to have all of it. You want a depth of leadership, and a capable second layer of leadership for you or management that's responsible for revenue, operations, finance, and culture. That can happen. You're there to course correct. You're there to oversee. See, what happens for a lot of people is they from the 0 to 3 million, they're used to running everything. And then from 3 million to 10, that's when they're building a management team. And for a lot of founders, entrepreneurs, practitioners, that's about the point where they start going, I've got those 3 worries like we talked about at the beginning of the show. I'm going to give up control. People are going to see the numbers. People are going to see the books. Mistakes are going to be made. Hey, all that stuff is true. Buyers prioritize this because the leadership stabilizes the investment. It reduces transition risk. It takes away some of the, hey, is this going to be a good deal? They're asking the same questions, but in a different manner. They're asking for different reasons. Your leadership protects the quality of earnings. And so the way that you look at it is like, hey, I'm building insurance. I'm building a team. It was an interesting event that happened. My grandfather was a dentist. And he was really successful. And my dad owned a pest control company. And there was a time where my parents were in Mexico with my grandparents. And they were sitting by the pool. And my grandfather did very well. And he talked to my dad and said, my dad's name was Dale. He goes, hey, Dale, I envy you. And my dad kind of laughed and said, why? And he says, because you're out here sitting by the pool and your business is going and making money. If I'm not at the chair side right now, then I don't have somebody who's taking my place. And my grandfather, for the entire time that he had a practice, didn't want to bring in a partner, didn't want to bring in a dentist, didn't want to bring in somebody else because he wanted to do it all on his own. Now, he was very successful, but he was also capped. He was capped at whatever potential that he had. He was capped at his physical health. He was capped at his capabilities during the day. And so you building a team isn't just the people who are underneath you, it's also the management. Because it allows for you to go to events. It allows for you to take classes. It allows for you to go to masterminds. It allows for you to take vacation. It allows for you to do something that's super important that most people never do, and that's think. One of the things that I'm a huge advocate for is you setting a time on your calendar where there's airplane mode and nobody can get a hold of you for 2, 3, 4 hours. And you have your favorite music. So I'll share with you my version of this. I'll go sit by the river for 2, 3, or 4 hours with a notepad and a pen and listen to classical music or opera. And for that time, it doesn't matter what's going on. You can't interrupt me. I don't care. The only thing that I worry about is a health issue. If my mom calls me with a health issue, or my brothers or sister or my grandparents call me with a health issue, that's it. Short of whatever's going on in the world, it's got no control over me. And this is a skill, a talent, a tool that you build up over time, right? You start with 30 minutes. Can I get away for 30 minutes? Can I get away for an hour? When I managed teams, I would literally go rent a hotel room. I would get one that had a table and a chair, and I would go lock myself because I knew nobody was going to bother me. The door was closed. You know, you go to a coffee shop, you hear people dropping a cup, you hear conversations. And during the day in hotels, they're typically really quiet. And for me, it was a good place to go. You want some organizational design clarity, clear roles, accountability, decision rights that eliminate, hey, who's doing what, or that cause bottlenecks. Buyers, they look for the structure, not improvisation. They want to know, like, hey, if you leave and you turn the keys over and you're like, hey, I'm going to go never wear shoes again, I'm going to go live on the beach. They want to know, hey, did we get a good deal? All right, I'm going to give you an analogy. You buy a used car and you meet with somebody and you're trusting them. And you're like, did you put sawdust in the transmission fluid to make sure that it was shifting right? You know, did you just change the oil? Is this thing really just, held together by duct tape and baling wire? And then, you drive away and you're crossing your fingers like, man, I hope that whatever they told me was true. Buying a business can be the same. This is why you want history through financials. This is why you want standard operating procedures. This is why you want org charts. This is why you want clear roles defined. Is because it proves like you're not buying the car that was a fix and flip that's really got a bunch of problems, going to break down in 100 miles. Like buyers and investors don't want that. And here's the thing too that you need to know is seasoned investors and seasoned private equity, they can pick up on this pretty quick. Yeah, I was a corporate sales trainer, and in the time of doing deals and having conversations, there's patterns to everything. In deal making, there's patterns to everything. In negotiations, there's patterns to everything. And you start like, oh, I see the playbook. Oh, they're doing play number 32. Oh, I see what they're up to. It happens. And when you've got a good management team, it's not just your team that's cheering on the sidelines. It's also your investor. They're like, hey, we'll gladly pay you a multiple because then we don't have to come in here and fix this thing. The dings and dents that you get in due diligence come down to, hey, we're going to have to find somebody to fix what you didn't and we're not willing to do. Yeah, this is the tough conversation. And thank goodness somebody's willing to have it for you. Somebody has to have the moral fortitude to have the conversation. It might as well be me. We may never meet, right? We may never ever have a conversation, but it's my hope that somebody, me, introduced you to an idea that helped you get more of a maximum multiple than sitting on the sidelines going, I wish I would have made more. And really what it comes down to is you want that bench of leadership. You want some second in command importance, a strong COO, a chief operating officer, a GM, an ops leader. They greatly reduce key man risk or key woman risk. You have to transfer the information and you have to give up control at some point. It doesn't mean you're not watching, doesn't mean you're not looking over the shoulder, but at some point you got to look and say, hey, I got to transfer these ideas, skills, and talents to somebody else. Otherwise, I'm not going to get the maximum multiple on my exit. Or they're going to say, hey, we like your company, but since you know too much, we need you to stick around for 3 months, 6 months, a year. And then I'm going to promise you this. Even if you love your business, even if you love your employees, when you got a big pile of money hanging out in the bank and you're like, I don't have to go to work today. Your brain starts going, this stuff's not that important to me. And if you have a decision to make and say, hey, am I going to make that decision now where I'm going to put in all the effort now. So in the end, I could just go, I'm all done. In Hawaii, they say all pau, which stands for all pau hana. All pau, I'm all done. I'm going to walk away. That is what you want. That's part of having the maximum multiple. You want to have succession visibility. Buyers, they really assess. They're like, who's going to step up and take over the role of the chief operating officer, which is you for right now. Who's going to take the role of the president? And the lack of clarity reduces confidence, and it makes them go, we're going to have some holdbacks. We're going to ding and dent this deal. Or they're going to go, we're just going to pay you as much as we can. There's going to be all deals have holdbacks. They do. Or if you're like, hey, I want all the money up front, they're just going to take 20% off the deal. It's your company. You might as well get as much money for it as you can. You're going to get questioned about this in due diligence. Every deal that I've been a part of, every deal that I've been around, on either side, this conversation happens. Who's around to take over the team? And when they take over the team, is the team going to stick around? Because does the team like this person? This is something to think about as well. And message from your sponsor, Sylvan Bell. That's me. If you're getting value from this episode, here's how to go deeper. First, subscribe to my weekly newsletter, The Party, at scottsylvanbell.com. That's where I share the strategies, frameworks, and case studies I don't release anywhere else. You'll get one actionable insight every week you can implement inside your business immediately. Second, while you're on the site, download the complete Sell Framework, Scale Framework, and Drivers Test, all free with scoring guides, worksheets, and step-by-step implementation checklist. These are the same frameworks I use with $10 million to $250 million companies to build systematic revenue, scale operations, and maximize enterprise value. Go to scottsylvanbell.com right now, subscribe to the newsletter, grab the frameworks, and let's keep building companies that command maximum multiples. Let's get going. Your leadership depth helps preserve the deal after the deal is done. It stops the buyer's remorse. Buyers fear the loss of a team, the loss of talent, the loss of capability, and they don't want the disruption. You know, you're going to have people leave. You're going to have a couple of people that peace out. I'm done. I don't want to do this. But the DNA of the business, it can't leave with you. It's got to stick with the company. And this is why I'll say, hey, if at all possible, if you can start preparing 5, 4, 3, minimum of 2 years out, this really works to your favor because you can start stepping away from roles over time. You can start giving up things that you do based by quarter, okay? So if you have 5 years, you've got 20 quarters to give up control of certain things. And you got 20 quarters to look over somebody's shoulders. If you've got 4 years, you got 16 quarters. So you just do the math. The problem is when you start getting down to 18 months to a year to 6 months, you're missing out on money that you could have had through a little bit more of time investment. And here's what I'm going to say. Would you rather have the uncomfortable conversation right now? Hey, my name's Scott. I'm going to give you an uncomfortable conversation. Why don't you start preparing 5, 4, 3 years out in advance? Instead of, I really wish that somebody would have told me, and I really wish that I was prepared. And part of this is really good, solid leadership. If you have 5 years to get the right leadership in place, you can make some magic happen. If you've got 4 years, you can make some magic happen. If you got 3 years, you can make some magic happen. If you got 2 years, the transferability of knowledge takes just a little bit longer than what you think because you've lived this your entire life. Maybe. Or you've lived this for 15, 20 years, so you're transferring knowledge. And so when you're taking a look and saying, hey, who do I hire? Part of that question comes down to who already has the knowledge. The old way, and there's nothing wrong with this, of doing business, is people have their jobs get time and grade. I've been here for 15 years. That means I need to be the manager. Well, what capabilities do you have? Well, I don't have any, but I got time and grade. And that's a tough conversation. But at some point, it has to be, and doesn't have to. At some point, you may want to instill in your company, hey, we're going to start bringing in talent. And then what's going to happen is you're going to have two things happen. The lack of talent is going to leave, and you're going to start attracting better people to come work for you and work with you. And part of that's a leadership team. So I'm not saying to look online like today and you're like, there's 3 people, we're hiring somebody tomorrow. Remember, if you've got 5, 4, 3, 2 years, you've got some time to your advantage versus if you're just coming in at 18 months and saying, I need to transfer this information. It really does take about 2 years to prep a company. You can do it in 18. It's cutting it close at a year. You're not going to get the max multiple because Every company, every private equity, every investor that's going to come to you, they're going to say, we want your books. We want 3 years of books. And 3 years of solid history is better than 2. And it's way better than 1. You want to move from approval-based leadership to principle-based leadership. Scale requires autonomy. This happens with decision bands. What can you make a decision? Like, look, my name's Scott. I screw up. I make bad decisions. In my mind, everything I do, I think is a good decision, but I make bad decisions. Your management team is going to make bad decisions. They're going to make bad investments. And you know what? You have too. If you go back over the last 3 years, you've made some bad decisions. And some of those bad decisions are inactivity. It doesn't mean you're like, hey, I spent money and lost money. Sometimes not spending money is worse than losing money because you lost momentum. So you're going to want to recruit talent. You're going to want to try to find the best people that are going to fit the role. Right? You don't want the fix and flip business because you're going to get dinged and dented on the way out. You want some cross training with redundancy. You want to reduce the single points of failure within the leadership team. This is why having 5, 4, 3, 2 years of capability is better than 18 months or a year. Your time to prepare starts like the minute that you're like, okay, I'm going to give you the numbers, 45, 50, 55, and 60. These are the years that people really start thinking in their head, okay, I'm getting close to that 50-year mark. I'm getting close to that 55-year mark. I'm getting close to that 60-year mark. And, you know, I want to go spend time on the beach. I don't want to wear shoes. You know, I want to wear shorts everywhere that I go. Whatever. I'm giving you my version, right? I'm telling you my story. I hate wearing shoes. I love the beach. I hate being cold. But, you know, what would I be willing to give up in order to never wear shoes again, you know, hang out at the beach and, you know, tell stories with all my friends? Well, if I can prepare for that 5, 4, 3, 2 years in advance, I'm much better off. Sometimes having an advisory board works to your favor too. You know, you could get a group of people in your community and say, I want you on my advisory board. And like, if you're bringing your management team in and all these people, you know, you'd have them sign NDAs anyway, some non-disclosure agreements, or if you don't trust them, you don't put them on your board. I mean, like this is pretty straightforward. You don't trust them, but you don't tell them all your secrets. And then you ask them, hey, what would you do in this situation? One of my favorite questions to ask entrepreneurs is not about their successes. It's like, what do you do in a no-win situation? Right? If you're in a no-win situation, what do you do? Like that to me is the wisdom. Like, you don't really typically read that in books. You always hear like, oh, hey, what do you do in this situation? And it's always about growth. On the back end, it's like, no, I want to know about failure. What did you do when you fell and you had to dust yourself off and get back up? You know, what led to all the bad decisions? Oh, okay, well that makes sense. Yeah. Hey, I greatly appreciate that. There are thousands and tens of thousands of books on success. I think there's like, at this time of this recording, there's about 120 on failure. And what's weird to me is nobody wants to read the ones on failure. Well, not nobody, but not everybody goes, hey, maybe we should read some books on failure. Buyers at some point interview your leaders, and weak confidence during these interviews, they lead to a lower valuation or longer holdouts for paying you. You have time right now to find the right person. You have time right now to have these conversations. And the time that you take to train this person is going to benefit you with you getting the maximum multiple. Right? So if you're like, say, Scott, I don't have 5, 4, 3 years. We're on 2. Okay, you got 24 months. You've got 8 quarters. So you're going to have to identify some gaps, hire strategically, and you're going to like start thinking right now today to put a little bit of pressure on you. But you're not hiring today, just so you know. You're thinking about it today. You're taking some action in the next couple of weeks, but you're not doing it all today. You want to develop a team internally and document leadership scorecards. The people who fight the scorecards on the left are the ones who typically don't stick around, just so you know. Like, so you spend all this time arguing about, are we going to do them or are we not going to do them? And then when you do them, what happens is the people who complain the most, they leave. Because they know that accountability is going to have to make them do their job. And if they scream and complain long enough and drag their feet long enough, that's just time for them to not have to do what they need to do. So you really want to define your KPIs and have the tough conversations and acquire the top talent and let people go who really don't want to be part of the team. So the tough question for you today is, would a buyer feel confident in meeting your team without you? And is my leadership team my depth lever? Do they give me depth and a lever and leverage over making a deal? Those are two important questions for you today. Mahalo for listening to the Sylvan Bell Business Growth and Exit Strategy podcast. Here's what's available to you right now. First, subscribe to this podcast so you get every framework we release. Second, visit scottsylvanbell.com to access the Sell Framework, Scale Framework, and Driver Test. All free with complete scoring guides and implementation worksheets. Third, subscribe to my weekly newsletter, The Party, where I break down strategies and frameworks you won't find anywhere else with one actionable insight every week. Go to scottsylvanbell.com and enter your email. And if this episode added value, share it with another business owner building a $10 million to $250 million company. Until next time, keep building companies that command maximum multiples. Aloha.